Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, all. Ira Epstein with your financial market update for this Thursday, the 27th of July, 2017. Now, we're about 2 minutes away before the boards behind me start cleaning off and we get into the last 15 minutes before the new trading session goes. It was a crazy day today. Huge earnings day in terms of reporting that took everything everywhere. Amazon got hit. So with that, you're looking at the NASDAQ. The tech stocks got hit. Look at this run, 59.95 to 58.44, 150-point drop, and yet the Dow closes up 97 points. So if you think this wasn't about the earnings and that's what it was, you're sadly mistaken. This was an earnings day that impacted different parts of the market. The gold and silver, a strong day. The dollar up at the expense of a number of currencies. Now the swings today, over the top, before the boards are raced. Look at the size of the swing in the Swissy, 105.71 to 103.82, without any major reports coming out, nearly a 200-point swing. I can carry you market upon market, 118.08 in the euro to 116.81, 121 points, yet the market only closes 20 points lower. Part of this is all due to one thing. Remember what I told you about reports when they come out from the Fed, that we get a yin-yang impact. And what's that yin-yang impact? We get a report at 1 in the afternoon. What time is it in Asia? They're sleeping. The European markets are already closed. It's roughly 6 hours later. So we get to Asia, they interpret the markets one way. We go to Europe in the middle of the night, they interpret another, and by the time it all comes home to roost, we as America look at it in one manner or the other, and then we get morning data, and markets go crazy. And often that's the case after big reports. We're going to get a big report tomorrow, GDP, so be ready for that. And it's all over the board as to what it might be. When we look at a chart in the weekly bar chart of the September E-mini S&P, this market is weekly, so 3 weeks ago you came down to the support line and you've held up very well. But for the week, with all the noise in the market, you're still up 2.5 points. When we take a look at a daily bar chart, you can see how the action of the market is. You had today an outside day down. What reignites the bullishness? Taking out today's high. What does today's high mean? It also means a trade top's in place unless it's taken out. You got to be careful with it because you went through the last low. So suddenly, instead of having a pattern of higher lows, you've got a higher high and a lower low now. What does that mean? Well, that's what we're about to find out. I think the GDP number is going to determine if this market goes through that high or not. If the market wants to settle back, potential support lies at the 18-day moving average of closes at 24.49.5. Okay, and that's not that far away. It's roughly, about 23 points away. When we look at this last rally, we did not get up to the upper Bollinger Band. We stopped shy of it. So the momentum in the market is a question right now, but you have your embedded reading. And when you have that embedded reading, what it means to me at least is this rules the day. Until that red line closes under 80, this is noise and the market can come back at you. Tomorrow's going to be super important. In the Dow, the market went right up and settled against its upper Bollinger Band. But let's understand what the Dow is. It's 30 select stocks. Got it? That's what we're dealing with. We're not dealing with 500. We're not dealing with 2,000 stocks in an index, a whole different world. So these select stocks, the earnings came out good. They're not really concerned about Amazon's earnings. They're more concerned, how did Caterpillar do? So I'm giving you the ideas here. And this market was very strong and still in an uptrend. The NASDAQ got to the highest high of all and fell apart off of, I think, those earnings. Other earnings came out too, but off of that one. Now, it still has its embedded reading. It hasn't lost it. Can the market recoup? Yes, but only if it gets over today's high tomorrow or the day after, which is Friday or Sunday and Monday. That's it. Otherwise, you close under 80, you probably make a run, that's what I would think, towards the 18-day average to regroup. Take that number out, and I think you got the upper Bollinger Band still as one of the targets you're going to. In the Russell, you did something totally different. Number one, I hate the fact that this market lost its embedded reading. So the only way you can get it back is tomorrow, a strong monster gain. When you lose the embedded reading, and I'll take you back to yesterday, here you're embedded. When you lose it, I look for price to return to the 18-day average of closes. Sometimes what you get is it loses it and hits that number all at once, and that means, okay, the market's already fallen down, didn't close under it, respected it, maybe some sideways action. But is the market any longer in an uptrend? It is not. The market now has no trend. It's got a higher high, a lower low. That's not a trend on the swing line. You have an upside bias because you're over the 18-day average, but momentum is turned down. Market's lost its way. In the VIX today got back up, hit first the 18-day average, went as high as the 100. So you know your resistance points, and then fell down. What else happened? If we take a look, this is yesterday, this is today. You lost your embedded reading as you were losing it. First objective, got to the second, and then, as it turned out, pulled right back to it. Okay. And as one of the things I've been trying to point out, you know, when you get these embedded readings, and I think I've said that repeatedly to you, I know I'm doing it in my subscriber video, it's very hard for the market to make a big move because at 9, to get a 5% drop, which I think you'd agree is good, that's 0.45 points. It had no trouble doing those, but on the chart it's just not going to look all that exciting because of what it is. Now in the bond market, the market is in a corrective mode. You've got lower highs and lower lows. You're in a downtrend. The only way you can negate it is taking out today's high, but that would not turn the swing line up. The swing line cannot turn up at this point here. So you've got a market that's got lower highs, lower lows, bearish. Market's under the 18-day average of closes, bearish, and momentum is pointing down. That puts targets, potential targets, of 150.130 to 150.110 in line on this chart. Now, probably a lot of that has to do with people looking at what the Fed said yesterday and saying to themselves, you know, if the Fed doesn't reinvest, monies is what we'll call roll off, the monies that they have on their balance sheet. And what we've been doing is they'll get in a 10-year or a 30-year or a 5-year, a 2-year, whatever they're buying in a Treasury instrument of some type, and they don't reinvest it. Well, they're not a buying force in that market. That might force that you got to what? Get interest rates higher to attract buyers, not an automatic buyer from the Fed. And that could drive and widen out the curve yield rather than the flattening we've been seeing over the past 6 months. Could be. So you've got in this market lower highs, lower lows, bearish, but you're over the 18-day average. You're not in a downtrend then. You got the swing line down, but you got upside bias in an overbought market. In the dollar index, the market today goes down, and let's get to yesterday if we could. Here's yesterday, right there. Market goes down. Yesterday's low goes through the lower Bollinger Band. Now that number is going to change and so on, but you've hit your downside target. Today's Bollinger Band's 93.10, and you hadn't even rallied. You got as low as 9,300, and all of a sudden you're back to 93.71. What about the embedded reading? It's still in place, but the way the math works, if this market's up 15 or 20 tonight, it could easily lose that embedded reading intraday. Whether it stays lost, I can't tell you because that's going to depend on the day's action. A sign that there'd be trouble, that maybe you want to rally the dollar a bit more, would be getting over 94.11, the last swing line high. The bears still have control, but to keep it, they have to be very aggressive tonight in the marketplace. In the euro currency, it's the flip-flop of the dollar. This market keeps hitting the upper Bollinger Band, can't really stay over it, throws itself back, and it could lose its bullish embedded reading very easily with just a slightly lower opening tonight. So you got to be careful of what these two currencies do. In the Aussie dollar, excuse me, the trend is up, higher lows, higher highs. That's clear. I would have loved to have seen it hit that upper Bollinger Band, but I think it ran out of momentum there. And the key is to watch this reading. You don't want to see that red under 80. As long as that doesn't happen, this market's got an uptrend, upside bias, looking good. But pay attention here. The way the math of this goes, you're probably going to be even higher tonight in that upper Bollinger Band, so that may not be a spot that you want to consider as a profit objective. In the Japanese yen, with all the nuttiness going on, excuse me, no surprise that the market had a run over the 100-day average again. It's overbought as can be. If it wants to, the upside target's 90.66.5, and there's no reason at all to be short other than you're just overbought, but that's not a reason to be short. The trend is up. You got higher highs, higher lows. You're over the 18-day average. You've cleared the 100-day average that you've played at a few days. This still often stops a rally. So between here and that Bollinger Band, I'm going to look for a bit of trouble unless U.S. stocks came apart and people started panicking. When we come to WTI crude, the one thing I've been saying is the market's at a key resistance area of the 100-day average, the upper Bollinger Band. It keeps eking out a few points a day. It's now got how many days over the upper Bollinger Band? Today, yesterday, I believe it was over that number. What about the day before? Day before it was over it too. So, and what about the day before that? The market was not. So you got 3 days in a row over it. The odds favor this market's getting ready to pull back under that Bollinger Band. It's also overbought as can be. That is not a sell signal. It's that I think that's where hedging might be taking place and people backing out of some positions. Gasoline, riding the upper Bollinger Band, but not an embedded reading, just overbought with no trend. You still have that lower low and the higher high. Natural gas pulling back to the 18-day average of closes, a trendless market. You've got a higher high and a lower low, so I think it's just going to hang in there. Momentum's gone flat on you, just sort of drifting sideways, so not an awful lot taking place one way or the other. I want to remind you what traders look at on days like today. Let me tell you how often I looked at pivot points today. Probably a dozen times. That might be a low number. I was looking to see where some of the stock indices might grab traction. And this is a tool that you can use to get ideas. It's just another part of your arsenal. And what it is, and the reason we give you this graphic, you get a center line when you figure out the formula. And the formula is very easy. We give you the whole thing, and everyone uses the formula in the same way. They can get more sell and buy points than we use. We use 2 sells above the market, 2 buys below it. You'll get a center white line. Look at it that way. And from that line, you're getting ideas of first resistance, second resistance, first support, second. So on the way down, I believe traders are buying those numbers because this is popular. They look at momentum indicators possibly with it, and they formulate a game plan. We have all this there to teach you and help you. Call us, go to our website. What you're going to get on both, if you call us, my staff will get this right out to you. We're going to send 2 videos to you. One, a PowerPoint that explains the theory, the formula, how it works, how it sets up on the chart. Then the next next video has real charts, and I teach you, it works the same on practically every piece of software that you may be using, how to do the colors, how to set them up for this particular study. If you have a good piece of charting software, it will have pivot points. If not, you should get one that has the pivot points. You can also click up here, and if you're looking at the icon, you're seeing me on YouTube, click it. It'll open up a form, or under us on many websites, it says click here for Ira's free information. Do so, put it in your hands. I'm Ira. You have a great day, and I'll talk to you tomorrow.